Globally, the adoption of sustainable investing is skyrocketing. If you look at a bar graph of global adoption in sustainable investing, it seems to be trending just straight upwards. In the end of Q1 in 2021, flows into sustainable investing funds per Morningstar data were just shy of $2 trillion. About 79% of that was flows from Europe. A little under 12% was U.S. assets, but 17 billion accounted from Canada, Australasia, Japan, and broader Asia. And the adoption rates are really being driven by global investor sentiment that environmental, social, and governance data and analytics can be additive to investment performance.
It is undeniable that the demand for ESG solutions in Asia becoming more popular, and especially with the government's intention to promote sustainable investing. For example, MAS in Singapore has set up a $2 billion investment program to promote investment with healthy green focus. FSC in Korea announced a series of initiatives to promote ESG and responsible investing early this year, and many other regulators in the region have actively promoted their stewardship code related to ESG matters. This also positive support and alignment with incentive from policymakers towards sustainable investing. In Asia Pacific alone, market data from Broadridge shows that ESG asset under management in the institutional space has grown rapidly at more than 30% per annum in the last 5 years on average, mainly due to the strong inflow we saw in 2020, and there is no sign of slowing down. For Northern Trust Asset Management in Asia Pacific, the ESG asset under management has grown more than 60% in the last 3 years, while more than 65% of our assets containing some ESG elements. So we believe that ESG investing in Asia is expecting to continue its strong growth momentum in the next 5 years, with regions like China, Hong Kong, Singapore, and South Korea being the lead. It's a good question, but it's not a straightforward question as well. You know, Asia is not a single country in the case, right? So we do see this as a journey for Asian institutional investors to adopt ESG investing in diversified ways. Locally, we are seeing a significant increase in inquiries from investors looking for help to include a level of sustainable investing into their portfolio implementation. Some of our institutional investors, like sovereign wealth fund and public pension in the region, have started to, their journey through exclusion of controversial business lines such as tobacco, gambling, etc., in their investment guideline. Also, in the early adoption phase, we see some investors going for passive strategies which track the ESG index. For some investors further down the pathway to ESG integration, they are starting to set certain quantifiable ESG targets in the mandate, such as carbon exposure reduction, and also integrate ESG in a multi-dimensional way. For example, our flagship quality ESG strategies includes exclusionary integration and thematic approach to ESG in the portfolio construction. The strategies combines exclusion while also targeting best-in-class company to have ESG uplift. We also seek to reduce the carbon exposure to address climate risks as well. On the other side, we are also seeing similar trends in the intermediary market. Local asset managers with limited experience in sustainable investing are looking for global asset managers for potential partnership to help create ESG solutions to meet their investor objective. But at the same time, they are also asking for knowledge transfer and give them insight to assist them in delivering exceptional client experience.